You're charging clients in the Eurozone and Switzerland for excessive cash holdings. That's caused outflows here in Europe. Are clients decreasing their cash levels right now?
It's not by choice. It's by way of regulatory requirements that we do that. And yes, clients are looking into alternatives to cash. Short-term investments is something clients are looking into. But in general, uncertainty around future strategies, in particular in monetary policy, still leads to clients sort of staying out and just tiptoeing back into markets. But there's not really a drive of people getting out of cash and reinvesting in the markets, else our transaction numbers would be better.
Within wealth management, where are new assets coming from right now?
New assets are coming from basically, a lot of additional assets, organic growth of already existing clients who are investing somewhat more, and then being the largest wealth manager and probably the only truly global wealth manager. We see inflows in particular in Asia, where our wealth management has been doing and performing well. We see a turnaround of our business where we've seen some outflows over recent years in Europe, to that stabilizing and turning to more normal dynamics. And it's a traditional business that is doing well.
Can you give us an idea of the size of the inflows you're expecting this year and maybe in 2018?
Well, over the last few years, we've had between 40 and 50 billion of net new money in each and every year. And that's kind of in our medium to long-term plan. So we expect to grow sizably. And if you compare that over the 5 years, we actually grow by the size of a normal mid-size wealth manager organically rather than through acquisitions. And that's the focus of what we're doing.
Let's talk about the ECB. Can you put your ECB hat on, your central banker's hat on, your former central banker's hat on? Should the ECB be worried about the level of the euro?
I don't think the euro in itself is a part of the decision framework of the ECB. It's part of the data frame they analyze. And yes, a stronger euro will actually mean that they face headwinds on some of the traditional indicators that they're looking at. For example, if you look at the developments in the economies that are very export-oriented, so an appreciation does undermine a bit the economic momentum. At the same time, it impacts on price developments in a way that...
Does it slow the normalization path?
I don't think it'll slow it or should slow it, but clearly what the ECB and the Fed are looking for is inflation moving more towards their target. I've made continuously remarks that, inflation around 2%, you cannot fine-tune that. So as long as the medium-term inflation prospects are in place, I think a forward-looking monetary policy should continue to normalize. For the Fed, that means for me that I don't rule out that there will be another interest rate move, and I definitely expect that they will announce how they will reduce the size of their balance sheet and start acting on that. For the ECB, look, we're in a mid-cycle recovery. Labor market has tightened, but we're not seeing capacity constraints yet. So over time, as the economy continues to improve, we expect inflation to pick up and to continue to rise.